Hey guys, Lex over here, and I want to address a topic that comes up every single day in conversation, and I think it's a really important topic to address right now. And that is, a lot of people are asking me, hey Lex, do you think the real estate market's going to crash? All right, so I'd like to discuss that a little bit and give you my personal opinions, and keep in mind, these are just my own personal opinions of what I think the market will do, all right? So I like to look at data, all right? I've been in the real estate market a long time. I've been in it 18 years, and ever since 2003 all the way through the prior financial crisis of 2008 and the post-recovery, which is where I founded my company, the Distressed Real Estate Institute. So I've got a lot of experience of dealing in the boom as well as the crash that came from that prior financial crisis, and I'd like to talk to you a little bit about that and about my thoughts on where we are today in the real estate market and whether I think the market is too high. All right, so I like to look at data, and here's the data that I'm seeing. All right, number one, I'm seeing just raw moratoriums that are a direct result of COVID. There seems to be, from the data that I see on Realty Track and on Black Knight and many other websites out there, around 3 or 4 million people that are behind on their mortgages, right? So there's different ways of tracking it. You can track people that are 90 days late, or pre-foreclosures that are before 90 days late, or you can track people that are already in the foreclosure process and all the way through bank-owned properties. Either way you slice or dice it, my anticipation, if that 4 million people are currently delinquent on their mortgages, it wouldn't be a stretch to assume that 25 or 30% of those people could ultimately result in their property coming on the MLS. All right, so that would be a tremendous amount of inventory to be adding to the MLS. So right now, for the last 12 months, banks have not been able to foreclose because there's a foreclosure moratorium. Now, currently that's being extended until June. It may get extended again until September, we don't know. But at some point in time, they're going to have to stop extending those moratoriums. And when they do, then what's going to happen is the banks are going to have to figure out what to do. Now, this is another thing that we don't know exactly how banks will react. Will banks go and say, okay, whatever balance you owe, we'll just put on the back end of the mortgage and everything's good to go? Or will the banks aggressively pursue people that are behind on payments? My opinion is, based on 2008, the banks probably are a lot smarter, and they'll be much more hesitant to aggressively pursue anyone that can be worked out. So anybody that wants to stay in their home and can work out some kind of a loan modification with the bank will probably work out those loans. Here's the problem. As inventory comes on the market for those people who cannot work out their loans, those people who don't have jobs, that don't have the ability to pay, their first thing they're going to try and do is sell their home. You're going to see listings coming up on Zillow and Trulia, etc., and that's going to add inventory. If they cannot move their homes and they get desperate, they'll probably lower the prices of their homes to try and entice a buyer. And the problem with that is that can affect the pricing of everyone around them. At the same time that this is happening, you're going to have a huge pileup of 3 or 4 million people that are in foreclosure, with the banks deciding which properties they do need to take back, which properties they aggressively need to pursue because the homeowner doesn't have a job, has no ability to pay. And so that's going to result in possibly a peaking in prices somewhere around the end of this year, is my guess, right around timing that foreclosure moratorium deadline, and that could result in additional inventory on the MLS, in additional homes for sale, potential short sales, ultimately foreclosures that will barrel down the pipeline, and some of those will end up as bank-owned properties. So what does that mean for real estate pricing today? Well, let's look at another aspect of the market, the eviction moratorium. By published data that I've looked at, it looks to me like there's somewhere around 8 or 9 million people that are currently behind on making their rent payment. The question is, how many of these people are going to be evicted once the eviction moratorium is lifted up? Right now, the eviction moratorium is actually expiring in a few days. So we don't know yet if it'll be extended or not. Presumably the current administration will extend it, but we're not sure about that. But what's going to happen when a lot of these people start getting evicted, right? How will that affect real estate prices if you have more vacant properties? So if you put these two together, I don't think it's too much of a stretch to anticipate towards the latter part of 2021 and going to 2022 that we might have some trouble on the horizon. So that's one issue. And as far as that's concerned, I would really encourage you, if you're a real estate investor, if you're brand new, you're looking to get into real estate, I would really encourage you to learn how foreclosures work. Understand foreclosures in your state, how the law operates. Are you in a judicial state or a non-judicial state? Understand the mortgage law and how it processes and how it plays out. In other words, when somebody doesn't pay, they get a lis pendens, and from there that goes to the REO stage. It ultimately gets sold at the foreclosure auction and goes back to the bank, right? So the question is, will you know how to participate? Will you know which sites to be bidding on? Will you know how to flip these houses and wholesale them to other investors? Or will you know how to buy them and fix them and flip them, or buy them and fix them and rent them? So I would highly encourage you, while we're still in 2021 and the market is booming like crazy, and it's definitely booming like crazy. In fact, in 18 years of real estate, I have never seen a boom like this with the amount of lack of inventory that we have today. It's so crazy that I just bought a house a few months ago for $115,000, and I repaired it and I'm selling it for $260,000. Those numbers, in my opinion, are not sustainable. Me selling a property for $120,000 that I bought for $20,000 just 6 years ago is not sustainable, because I believe that wages are nowhere close to going up relative to the prices of rent. So one gauge I like to look at, which is my own internal gauge, is I look at what a house rents for relative to what the mortgage payment is. As long as that mortgage payment is at the amount of rent or less, it seems to me like if the FHA is giving loans, you'd be crazy not to buy a house. However, what would happen if rates moved from, let's say, 3% to where they were just a couple of years ago, 6%? Well, that would be game over for many, many buyers. What would banks do? How would banks react if prices came down? Would they possibly be less lenient? And would they possibly be stricter in what loans they give out? So I think if you couple all of these scenarios together, we're in very strange times. We're in boom times. Everything's booming. Stock market's booming, real estate's booming, even Bitcoin's booming. But I don't think that this is going to last. I think that there's going to be some trouble on the horizon, and if you would ask me to guess, I would say probably towards the end of 2021 and going into 2022. So my suggestions for you on how to play it: number one, certain strategies are going to work in any market. Buying a property, repairing it, and renting it out and holding it long term. Lock in those low interest rates. You can get a 15-year mortgage today for 2.75%. Do it. It doesn't matter what prices do, because if you own that house for 15 years, at the end of 15 years, you own it free and clear, and that's retirement income for life. You buy 10 houses like that, and you'll be a multimillionaire. It's that easy. So that strategy is always going to work as long as the property cash flows. Make sure you're paying attention to traditional rules like the 1% rule. Don't be overpaying for properties. Also be aware that there may be better opportunities for you to buy on a dip towards the end of the year. So that's my thoughts on the real estate market and whether or not we may have some kind of a housing crash. So the question becomes from a lot of students of mine. They say, well, what would you do? Would you not buy it all right now? I say, no, that's not what I would do. If you have a big real estate portfolio like I do, I think it behooves you to take some money off the table, sell a few properties, pay down some debt, put some cash in the bank, deleverage yourself, make yourself conservative and safe, because if there is some trouble on the horizon, you will have cash at your disposal to go in and buy. If you're a new investor and you're fixing and flipping or doing whatever you're doing, keep doing that, but just keep an eye on the fact that what if you fix up that house and you go to sell it and a buyer can't get approved or prices pull back? What's your plan B? So if you tell me your plan B is, oh, no problem, I'll just throw in a tenant and I'll hold it long term, that's a good plan. But if you're stretching your numbers and your numbers won't work, then you don't have a plan B, right? And I think a lot of people are doing that right now. I think a lot of people are overextending themselves with leverage and just thinking that these good times are going to go on forever. And they may go on for quite some time. I mean, if interest rates stay low for 2 or 3 years, who knows? You know, maybe the stock market crashes and everybody pulls their money into real estate and interest rates stay low because the market is having a hard time and real estate booms for 2 or 3 or 4 years. That's what happened, by the way, after the stock market crash of 2000. We had 2001. You know, we had September 11th, and interest rates were kept artificially low. And as you know, real estate boomed for another 4 or 5 years. So that could happen too, right? So I'm not saying don't buy. I'm not saying sell everything. I'm just saying, and be cautious. Take some money off the table. When you're buying, pay attention to the numbers. Pay attention to the details. All right. So those are my thoughts on that. And real estate's always a good time to buy. You buy a rental property and you put a tenant in place and you put a 15-year mortgage on it. 15 years from now, you own it free and clear. And if you're focusing on financial freedom, if you're focusing on building wealth, don't focus so much on what real estate does over 1 or 2 years. Focus on what it does over 15 to 30 years. All right, so that's my advice, guys. If you like this video, make sure you hit that subscribe button, and I will see you on the next video.